All right, we are live. Welcome everybody to another episode of the Bootleg Weekly special emergency episode on a Monday edition because Roy is actually going to be in New York City in the Robinhood Investor Day tomorrow. Let me retweet this up.
Technically on Wednesday, but yeah, leaving tomorrow morning. So I'll get to see in New York City a little bit tomorrow, which will be fun. But yeah, the real reason why we couldn't do it any other day is because your dating life is too busy. But you're killing it in all aspects. But at least I get the investor day. So
I don't know what you're talking about. I don't know anything about that at all.
of course. Tonight we're gonna have a lot of fun. There are some basically some topics that we really wanted to go through. Actually, a lot of news in the market today. Too much for an hour, but we're gonna hit Tesla for sure. Note on him, some on Robinhood Investor Day, and of course, there's a big piece on Clean Spark as well, which is going to be a lot of fun. So glad you guys are joining us here tonight on a very irregular Monday, but we wanted to get this in. So, what do you want to start off with, Ted?
Well, we could start off with the Robinhood Investor Day stuff. I will just grab a drink, 2 seconds. I can still hear you, and I'll be right back.
All right. So yeah, Robinhood Investor Day. It's their first one. It's coming up on this Wednesday. I believe it's 11 o'clock Eastern time is the start of it. And yeah, usually when companies do this, there's a bit of a run into that actually event and a sell the news event. But it's not always the case. This is going to be interesting. It seems like it's going to be Vlad just casting his vision. And the really interesting thing about that is it's a vast vision, just like hearing bits of it in earnings calls, hearing bits of it, of course, at the Robinhood event in Miami. Democratized finance. Finance is really, really broad. And so there, I'm pretty sure, are going to be some absolutely crazy possibilities, not anything definite, but as far as different vectors and different areas where they can actually go in the future. So that can include crazy things like I saw this in one of the surveys that they were sending out, mortgages, like Robinhood mortgages. That doesn't sound right, but I mean, we'll see. That of course we've seen event contracts recently as a new thing that Robinhood is doing. Of course, there's future markets that are coming. But there's a lot more that finance can do. And so there's certainly some things that they'll stay away from, but I think we'll get a grasp of how big this, how big Robinhood could really be. So, and as an investor, I appreciate that. It should be a fun time. So Tevis keeps disappearing because he's like, man, I'm going to short Robinhood, right into that event. And
no, man, I saw they recently released tax lots, which I thought was really cool. You can sell stock based on different lots that you've purchased it for tax reasons. I mean, that's a cool feature. I was talking about it with a friend earlier today, and he was saying like, well, other brokerages have that. I was like, my brokerages don't have that. And it's I mean, they're always going to be at the forefront of innovation from a product and feature perspective, which I think has come to be expected from them at this point.
Yeah.
And by and large, that's priced into, like, that growth rate is priced into the stock, especially at this point.
Yeah. No, this isn't Robinhood at $9 when I was buying it. It wasn't Robinhood at 14 when I was like, Tevis, buy some. And you're like, no, I'm good. I got too much money as it is. And I'm like, okay, fine. It's looks like it's primed for, $40 before the end of the year. Anything could happen. It could fall back to 30. A lot of the narrative is tied to crypto. Probably the biggest piece too. I think it's partly running for the reasons that you said, but they were from what I could tell, like the election was a little bit confusing as far as like what the winners were as far as stocks in the market. There were some pretty clear losers, and the market at least thought that Tesla was a winner, although there's possibly some issue with tariffs and of course with the tax credit possibly likely going away within a year. But Robinhood, to my mind, was like a very, very clear winner, as was, Coinbase and many others that, are trading platforms, just because Gary Gensler has been like death to the crypto industry. And so with him being gone, on day one, when Trump gets in the office, and every single nominee being very, very open towards crypto, like that's just a great thing for Robinhood. And they were so confident, I think it was like within 3 days of the election, they re-released XRP, ADA, Solana, And I believe that and PayPay. And now they've added a couple other coins as well. They're growing their crypto platform. They basically stopped for 3 years. This is Robinhood. It's not like it's SoFi divesting from crypto. So, between the bull market likely continuing on for a little bit longer and certainly being excited as far as like all the regulation, like they're a very clear winner. But the question is like, how much is actually baked in? It's hard to tell. This may be a sell the news event. If so, I will be adding. Right now, I'm just kind of doing a wait and see type approach. And I'll probably regret not adding more, but all I have right now, except for just a small bit of option that I might exercise in January instead of just sell it off. I've got the position I like, about 5% allocation.
Sorry,
so are you interested in the company at all?
Robinhood you're talking about?
Yeah.
Yeah, I mean, like, there's a lot of companies right now that I think are a potential avenue, but there's no companies that are a screaming buy to me right now.
Yeah.
I'm struggling to find companies where it's like screaming at me. Maybe new, honestly, but I feel like, I still don't know enough about it. I have to do more research, especially the sort of geopolitical aspect of it. In terms of, Robinhood and all these other fan favorites, let's say retail favorites, I would have bought it at 20 when I had the chance, or 25 or whatever, and I didn't. And so to do so now would be, I think, chasing and kind of reckless on my half, simply because I made a decision to buy other names, namely SoFi, Tesla was adding to heavily. I remember we were talking about Tesla in the 160s, 170s, and I was like, this is stupid, no brainer.
And HIMS.
HIMS at $13-14. And so those have all treated me very well, and so I don't have any FOMO about missing, like, maybe Rocket Lab a little bit because of how hard Matt sold it to me when we were in Mexico. but
like in hindsight, I should have just bought, I'll buy 500 shares. Sure. Whatever.
Yeah. Yeah.
I didn't. And it was, that's frustrating. Yeah. It was, I looked into it and right then, like it ran to like 7 or 8 and I'm like, it'll probably come back. I'll wait. And it's like 20, it's like whatever.
That's exactly me. I did write some cash secured puts though on Rocket Lab today. So I told Matt, I was like, hey man, worst case scenario, I make like $300. Best case scenario, this is our stock now. we're both in it.
Yeah.
So we'll see how that goes.
Well, I will say, PayPal, let's not talk too much about PayPal, but they're likely to release their Black Friday, Cyber Monday, the Cyber 5, what they call it, numbers tomorrow, along with Adobe Analytics, along with probably Shopify updating that, along with Stripe posting their final numbers. A lot of people, maybe even Walmart will post that.
Yeah.
What's really interesting is before today, at least according to Adobe Analytics, e-commerce was up 14.6% year over year for the, and of course, Cyber Monday could have been a letdown. And so it's, only up 10% only. Mm-hmm. That's PayPal's bread and butter, even though they're doing the pay everywhere. They're trying to get into that omni-channel. And they last year had 25% of all e-commerce globally go through PayPal or Braintree or Venmo, something that PayPal owns. So, yeah, if we see headlines tomorrow, like basically confirming, because like today was kind of quiet and it makes sense. It's Cyber Monday. People are focused on those sales. PayPal could absolutely be a name that absolutely flies, along with, some of the others I mentioned too. So Amazon would be one of those.
Well, I saw headlines that this was a record in terms of the actual volume that happened through Black Friday and Cyber Monday. And yes, it's good for the health of the economy, or at least the sort of consumerist nature of the US retailer. But I didn't end up buying anything, like I think this was the first one in a couple of years where I just haven't bought anything. I didn't even really look. So I don't know. I'm not playing that as a trade one way or another. I think Amazon is going to be, it's undervalued and it's going to be a big winner. Am I buying Amazon? I think that for myself, like I said last week, my largest position right now is cash. I have like 27, 28% in cash simply because I'm leveraging that cash to do cash secured puts on a weekly basis. And so I don't want to lock that money up into something that won't make me, money weekly. So it's duly beneficial because if things do fall more, like I'm considering new, to the point where, maybe I do cash secured puts on new and get in that way, even though the premiums are crap. Maybe I do like
They're terrible.
cash secured puts 3 weeks out or a month out and actually get some better premiums.
Yeah.
Or I just flat out buy the stock and lock up that capital. But again, it's a whole different way of thinking when you're cash flowing money. I don't have any FOMO at all because, I made like 4 or 5 trades, and I can walk through them today, like all cash secured put trades, and they're all like between 0.8 and 1.5% of yield on risk capital or collateral capital, I should say. And I'm doing that on a weekly basis. So I'm like, okay, cool. Like,
Yeah.
whatever, your stock can run. Cause I actually, I was just comparing it with a friend because November wrapped up and I did the numbers for November. And I'm not going to get results like this. And I realize it's an anomaly and beginner's luck and whatever, but like I had 7.6% for the month of November, which is insane because if you annualize that, that's just ridiculous numbers. My point is because I'm doing that, I don't have FOMO. Otherwise, I might have had FOMO and it would have probably forced me into buying something at a okay valuation,
Yep. Yeah, no, that's a nice thing about being able to use your cash while it's there, not just as far as the whatever low interest rate you're getting. You're making some money too, and I'm doing the same thing. And my cash position is smaller than your percentage. It's like 5%, and I've got a swing position of like 3% or so. That's just cash secured puts that I'm fine with them being exercised, but I prefer not to. And actually, a good chunk of those are in CleanSpark. So maybe we'll talk about that name. Are you in CleanSpark at all, Tevis?
I do have about 1,200 shares of CleanSpark. I wrote cash secured puts for 1250 last week. They didn't get hit. I don't have any cash secured. I wrote ones on Mara today, but I didn't. I left the top end open because I could. CleanSpark was green today, a couple percentage points, and I thought about writing like 19s or 20s because it was good premium because of the event tonight. They had earnings after the bell, and so you had a little bit more lucrative premiums. But I didn't do that because I thought that if management comes out and they announce that they're issuing bonds to purchase more Bitcoin, like this thing is going to fly because that's what a lot of investors are expecting. And I mean, they released good numbers. I think they double missed, but the numbers were fine to me. It's just they didn't really have that Mara playbook. And Mara, I think, after the bell, also said they're raising even more money. So they're going full MicroStrategy Bitcoin Treasury strategy. And so I just think that CleanSpark right now, well, we'll see how it trades, but the catalyst that I had for it to go to, like, if management had opened that call and released a PR to say, hey, we're issuing bonds and we're going to use the proceeds to buy Bitcoin. Like I honestly think we would have opened the day at like 18 and then probably run to like 20.
Yeah, I mean, in November, production numbers will be probably more important for CleanSpark than these, honestly. Like going in earnings, you mostly know what is going on, except for like those special type of announcements. And if you throw up the chart, you can't trade this in Robinhood Legend, but you can at least see where it's at. And so 1384 is where it's at overnight. I think it closed regular market stuff at 14. So there's a big drop from like 15 and some change at the peak today. But that happens. It's not the end of the world. Now, what is actually interesting, I should have left that up. Jesse actually found this, and I knew some of this. So like one of the things I know about CleanSpark and miners, it's one of the reasons why I just swing trade them. Usually a lot of gains. Sometimes I have to hold it for a little while, and I'm fine with that. But I don't like them. They're sketchy businesses, like long term. I have them in my tax advantage accounts where I cannot have any crypto exposure at all, and so they're a proxy for that for me. Although honestly, I would have just been better off buying more Robinhood there. But if you throw this up, this was. Well, I can't find the original tweet, but the CEO of CleanSpark said something like, "We're melting the shorts," and yeah, instead, like the opposite happened.
Whenever you
And
have a CEO, like he should have said, "We're gonna drink our urine and our enemy's blood," and like
yeah,
that was
like a real
probably
CEO.
pump the stock. But if he says, "Hey, we're just gonna melt the shorts," like it's not bold enough, man. You're not putting yourself out there.
And of course, a year ago, they bought a private jet, and they, said, "Oh, well, we're doing all kinds of different flights, and it's hard to schedule things, and our personal time is valuable, and we're so busy." You spent like 60 something million dollars. I don't know how much it was.
Yeah.
And whenever a corporation or an individual, I've even seen it with like some very sketchy like cult figures, do that, they all have the same justification, right? It would have been much better if they just bought more machines to actually mine Bitcoin, or just Bitcoin itself. That's $60 million. It's not small. Like a lot of these companies just don't have appreciation for shareholder value. I'm still swing trading CleanStark largely because it's one of like 3 miners that really have a good options chain where I can sell cash secured puts and covered calls. Mara and Riot being the other two. Like Cypher, I really like Cypher. I like Iran.
Right.
But their option chain is just sparse, man. Like I can't do what I want to do on those. So
Well, look, what you'll see, and this is honestly what I think, like over the next several months, probably in the next 2 quarters, you're going to see some type of bifurcation across the miners because last cycle, when Bitcoin was at 67 or 69, wherever it peaked, you didn't have all of these same players into the game. A lot of them were born out after that, Bitcoin crypto winter into the second cycle or this one that we have right now, and you're going to see winners and losers. And I honestly think that MicroStrategy, with their whole approach of issuing convertible notes and using the proceeds to buy more Bitcoin and becoming a Bitcoin treasury, I think that's going to be a playbook that many companies that want to survive the next time around are going to be leveraging because of that premium boost that gives not only the stock, but it also just solidifies the position, right? Because a lot, like the hash rate, yes, it's going to go down, but eventually, like a lot of these miners are going to get totally wiped out with their financial moves that they're making if Bitcoin were not at 96,000 right now, right? And we know that, hey, Bitcoin is very cyclical. Like it's probably going to break 100. It's probably going to go to 110, 120, whatever. But there's going to come a time in the spring or the summer where that money is going to flow into altcoins and Bitcoin's going to stagnate. Maybe it's going to drop back down. And then further on next year, Bitcoin is going to even fall further, form a new higher low, whatever. But my point being is that a lot of miners are going to get hurt disproportionately to that because of their business model right now. And I think Marathon is doing a pretty solid move along with MicroStrategy to essentially say, hey, we're a proxy on Bitcoin, we're holding, and we're essentially a treasury here. We'll see what happens, but I would have loved them to have actually gone that same approach.
Yeah, it's better than buying a private jet, I'll say. It's a depreciating asset. It's just like it's the opposite of what Michael Saylor's approach is. Although I wonder how they'll do, and it feels like almost a house of cards, especially if not done perfectly, when crypto winter arrives. Not if, but when. And it feels like it might be postponed a little bit, partly because of the SEC change and shakeup, and of course the institutions buying. And we've talked about that before. Can you throw up this as well? This is something I saw maybe an hour ago on the App Store. So these are the top 3 apps on the App Store. What do you notice about half of them, Tevis?
Are crypto related?
Well, no, it's half of them are blue and half of them are green. But yeah, other than that, you're right. It's they're crypto related. Yeah, Coinbase number 1. You don't see that too often. You might not be shocked to see it if Bitcoin was at 101,000 or something. Of course, Crypto.com and Robinhood as well. But yeah, I just thought that was interesting that despite the current price action, like there's a lot of interest, especially after the holidays, probably when people are. And I even had a conversation, I think 2 Sundays ago, with a guy who's like mid 60s, and he brought up out of the blue, he's like, "So what do you think about Bitcoin?" I'm like, all right, it's that time again. He's a friend, so not quite a McDonald's Palantir conversation, but it's
there's so many signs out there that it's getting toppy. It's weird. especially because like the main catalyst, the Bitcoin crossing 100,000, like it's getting caught up on all of this resistance, which I get. It's a huge psychological level. So you have this massive sell wall at 100, but I would have thought that we would be here a little bit later on in the cycle after we had crossed that 100 threshold, just to serve as a psychological sort of confirmation that we're well into the Bitcoin bull market. And as money flows into alts, like people are creating all of their own shit coins, and it's just weird, man. Like the Enron thing, do you see that? These people just made like, they revived Enron, they got the domain or whatnot, and they made their own coin. And it's just like, this shit scam is what you see, I feel like, a little bit later on in the cycle, because if it's happening so early and we still think that there's room for Bitcoin to still run into the next couple of months, then it's like, well, how bad is it going to be in the in February, March?
Yeah, it's a weird time, but let's talk some Tesla. I see some comments and questions on that already. You and I are big into Tesla. You more so than me. My percentage, I did my portfolio, by the way. We can throw that up too after this, and you can yell at me for not buying more Tesla if you want.
let me just cover one thing real quick before we move on to Tesla, which is this comment. I trimmed Coinbase. I still have some Coinbase that I'm going to be waiting on. I did see the news around Coinbase and Apple. Did you see that, Roy? So essentially, it was that Coinbase here. Maybe I have it that I can throw it up because I retweeted it earlier today. Yeah. So Apple Pay with Coinbase. Coinbase now lets you use Apple Pay to buy crypto instantly. So you can essentially just do it through Apple Pay. I mean, it's nice because it's an integration. I don't think it's like a game changer, to any degree. But I fully intend on letting go of all of my Coinbase. And there's levels where I'll just take, more and more profit. I have taken some as we crossed to, 320 range, and I took some, and I think we're pulling back. I don't even know what it's at right now. I haven't, looked, but eventually I'm going to get rid of that, and as well as the miners. But yes, let's move on to Tesla.
All right. So if folks remember, I think it was just about a year ago, a ruling in Delaware where Tesla was based. Now they're based in Texas by a judge up in Delaware. Her name, Kathleen McCormick. Yeah, I was like, I don't mind saying her name because what she's done is just absolutely heinous. So initially there was skepticism whether it was Elon was properly awarded, his stock, his shares in Tesla. And they said, the board did it illegitimately because of reasons X, Y, and Z. So that led to, in the annual meeting, shareholders voting. So you and
let me add some context.
This
was the 2018 pay package that investors, by and large, like by an overwhelming majority, I think it was like 70 or 80%, voted in favor of, because if Tesla were to hit these thresholds of where they had to be, all the investors would get rich in addition to Elon. And the lawsuit was started, I mean, in my opinion, as an absolute cash grab, because the guy had like 8 Tesla shares or 13 Tesla shares, something ridiculous. And he started a lawsuit saying that, or she started a lawsuit saying that they were hurt by this. And the law firm essentially is the ones at fault here because they saw an easy payday by jumping onto this. And for whatever reason, this circus continued because it's the Delaware courts. And then a judge eventually, struck it down the first time. And then they were like, okay, well, let's do a revote in June of 2024, literally to retroactively give the pay back because Tesla had already achieved those levels and then was trading flat for like 3 years afterwards. Sorry.
And it reminded me, I think that the opposing lawyer wanted to be paid in Tesla shares or something like that.
They want to be paid like 5.3 billion or 5.6 billion, something insanely ridiculous.
Yeah. Don't pay Elon that actually created and led the company to success. Pay the lawyer of the opposing side. Like, this is it makes me so mad. But anyway, thankfully, the shareholder vote went through, positive, and it wasn't particularly close. I was worried that it actually would be, just because of greed, and
Yeah.
some mega wells and institutions were like, hey, absolutely not. We don't want to dilute. Um, but that I don't know what would happen with Elon. Anyway, we know that didn't happen. But then today, throw this up, Tevis. A Delaware judge just overruled a supermajority of shareholders who own Tesla and who voted twice is correct, to pay Elon Musk what he's worth. The court's decision is wrong. We're going to appeal. This ruling, if not overturned, means that judges and plaintiff lawyers run Delaware companies rather than the rightful owners, the shareholders. What do you think, Tevis? You think this is going to go anywhere, the appeal?
I hope it goes like the highest levels, and I hope it becomes like a Supreme Court thing, because like it sets a precedent, man. And that's, I think, the problem is that all these other companies, regardless of what may happen, for some super petty reason, any investor who owns one single share of that company, and any law firm that's greedy enough that, by the way, when this judge struck it down the second time, the court also ordered today Tesla to pay $345 million in attorney's fees. So the lawyers basically asked for 5.6 billion, which is ludicrous. And the judge was like, you don't have to pay 5.6 billion, 345 million. It's like, what la la land do we live in where that's an okay amount to get paid for this? Like 345 million, dude.
Yeah.
Like, go back 20 years in the US, national budget, and like you'll see that these things actually made a dent up until recently. And now it's just like, yeah, we'll throw 10 billion here, 20 billion there. It's like 345 million is still an obscene amount of money. And so my point being is that if this thing does not get overturned, activist judges across Delaware can then call that same precedent. And me, with one single, I don't know, PayPal share, I can say Alex Chris hasn't done anything for me recently. I can go to the same law firm and then I can sue them. And the same, activist judges will then just on a whim determine if I'm right or if I'm wrong. And who gets rich through all of this? It's going to be the law firms that get rich. So I think it's absolutely a point of principle that they have to at least try to overturn this because of the precedent that it sets.
Yeah, it's. I think it's vital it gets overturned. I think, regardless, just because of this being brought up again, attempting to overturn not just one but two shareholders' attempts at saying no, this is what we want to do. I think that there will be some companies leaving Delaware. Now, if the appeal is not successful, I think a lot of companies will actually consider leaving Delaware at that point and going to whatever state they actually should have been in the beginning, because it's not worth the legal risk, the headache, and then the monetary loss in the event that something like this happens. Now, the question is, why is this happening? Do you think that this is, it's speculation at this point. That's all we're doing. But do you think this is politically motivated? Is it just a pure cash grab? Did Elon Musk run over this judge's cat? Like, what's going on here?
I think all of the above, dude. Like, minus the cat part. But like, it's very polarizing, right? Because you have this person, and especially because he put himself in the crosshairs by being so political and so supportive of this administration. And yeah, of course you're going to get targeted by these activist judges. And it really sucks for me to even say that phrase out loud, activist judge, because they should be this sort of neutral third party arbitrator. But that's the world that we're living in. And so I think that if it was any other company, maybe a second vote 6 years later would have actually made a difference. But I think in the case of Tesla specifically, like, I'm not really shocked that this is happening. I'm just disappointed.
Yeah, I thought we were done with this. With the second vote, it's like, okay, shareholders express themselves very clearly. It is a super majority. It's there. We want Elon to have the shares. We want Elon to be around the company. This company is about Elon. And when the vote was announced as successful, like, the stock took off. So, I mean, there is a bit of a move there. I don't like that at all, as a United States citizen. So,
I mean, I don't, if you want me to go there, I can go there. But hey, man, I might be a citizen soon, actually, in the 51st state. I don't know if you've heard of it.
I did. Yes. Yeah, if you guys
So
don't pay up, you can't afford to do things up there, just join us. Yeah, that sounds good to me. So,
proud
uh,
citizen of North Montana. It's gonna be
you
great.
wanna send a I don't know if Matt's that serious. I don't know if he's ever serious, but, you wanna
That's the
throw a link to
problem,
him?
man. Matt is never serious. Like he's probably just giggling at a screen typing this shit. Like Matt, you're always welcome, and just let me know if you want the link. I'll even post it here in the chat. But yeah, if you want to join, here, post the stream. Yeah. Okay, there we go. All right, what's next? Portfolio. Ooh.
Yeah, here's my quarterly portfolio update, and so I just go through and I've grown my number of positions. I think last year at this time I had 5. I didn't have HIMS, did not have Nubank, didn't have Enphase, didn't have ABCL. I guess I had 6. So yeah, some newer positions as well. A little bit changed on some names. Palantir, you'll notice that's actually probably the most shocking for some folks is not how big it is, but how small it is.
Yeah.
Back in 2022, I was at 90% Palantir just because I'm like, this is stupid. I loaded up. I think most of my shares came at like $6.20, which worked out okay. Did sell my leaps. I have some covered calls underwater, which is the reason why the premium hasn't quite appreciated as much as I'd like it to. And I will take a little bit more profit in January if the price remains where it's at. Not much, but a little bit. It's a little bit less than 25% of my shares. So I guess not a little bit, but it's a chunk that'll reinvest into some certain names depending on what looks good out there. But probably just a reallocation in these names. SoFi is maybe the other biggest shock. Do you remember? I don't know if you remember, Tevis. We didn't do this last time, but I had SoFi was about 5%, PayPal was about 5%, Tesla was like 3%, Robinhood was 5%. And so I had all these names like right there. And all of a sudden, bam, SoFi, 17.6%.
Can you answer this, Roy?
Over under, it's under. I'll say that it's 6 figures. It's under 500K. Another good year, maybe it'll be different. I'll just say that. So, but no, this year has been really, really nice. So yeah, I'm not a mega well. I don't have 7 figures. It's under 500K, even including everything combined. So not like house or anything, but I've got beyond this. By the way, like one of the reasons why I was initially able to allocate a very, very concentrated portfolio is I have a pretty good sized chunk. I would say if we're including this, it'd be about 30%. That's allocated towards like just broadband stuff that I don't even look at. It's just there. I've got some physical silver. I've got crypto. I don't count those things. I just buy and forget. Like that's the best thing with those type of things. These ones I actively manage. So yeah, haven't taken really any profits on SoFi other than selling covered calls and getting out of my 2025 January leaps completely. Mostly converting those at a 2026 and 2027 under $10. There he is.
There he is.
And of course, Hims is a big one. Actually, as Matt's coming on, and Matt, you can talk about anything you want tonight. There is a special someone that quote tweeted a special someone on a special certain name. Tevis, do you have that you can show us?
Yeah, I didn't even think it was that big of a deal. And then
It's pretty cool.
You guys were I woke up late this morning and I woke up at like around noon. And then you guys were like, oh, Tom Lee, and I was like, okay, great.
Yeah.
So we were talking about how Tom Lee was potentially getting into HIMS, and then I said, hey, there's multiple reports that Tom Lee is getting into HIMS because I was seeing it around, but it's obviously behind a paywall. And I posted this, and then Tom went ahead and he quote tweeted saying that HIMS is a small to medium-sized granny shot, which is basically like his easiest, best performing stocks, easy money plays, which is really interesting because Tom Lee, as we know, is somewhat of a perma bull in the market. He has been the closest, I think, analyst that comes to mind for me, at least in this, most recent market. in terms of what actually is going to happen. And he's very bullish on 2025. Actually, let me even play this, because when I made that initial post, I posted a clip that Tom was talking about the 2025 market, which Tom did on CNBC on Friday. So let's take a look at this. Let me know if you can hear it.
Press investors heading into next year. Here to take on that question, Tom Lee of Fundstrat. He joins me at Post 9, also a CNBC contributor. Tom, good to see you. Thanks for coming in.
Yeah, great to see you, Mike.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is, how do we set expectations for the year to come, given that that's all in the books?
It's a great question, because we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup, because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems that there are all these supportive factors. And when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you think specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction. But are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets. But I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
It's interesting to me that, the way the market has behaved in the last several weeks, but even going into the election, was we need to own more cyclicals. We need to own more financial stocks. We're going to reprice this market for maybe a growth acceleration even, or at least maintaining above trend growth. Meanwhile, though, we're only a couple months removed from a pretty big growth scare. Job growth has kind of slowed to a point. The housing market seems pretty locked up. It's kind of interesting how the sentiment has kind of jumped ahead. Is the economic numbers positioned to actually validate that view?
Markets tend to be forward-looking, so I would expect this. I know there has been a recession in durable goods and in housing and auto sales, principally because of high rates, which have made affordability an issue. That's really on the come next year. I mean, I think the spread of 10 years and mortgages should come down, and the 10-year hopefully behaves. And I think if there's more confidence and more supply, I think housing actually could lead this recovery. I mean, I think that's why home builders actually started to act better this week as well.
I'll pause it right there. There's about a minute and a half left of that clip, but I'll pause it right there. Matt, I would love to hear your thoughts to start us off.
Gentlemen, good evening. Finally, we've able to receive an invite to Btlg Wkly after much trial and error. Sorry for the mess in the background. I got a new monitor today, so great day. Man, anything that Tom Lee says is a great time, and that's all I'll say about that one. He's a good guy, and I follow him a lot. He's a good guy.
Are you going to follow him into hymns?
No. Although we do have it in the public portfolio and we're up over 100%. I will say HIMS, I did a review on it about a year ago. It's probably one of the worst calls I've ever made. And it was based off the fact that, and I don't know if I've told you guys this one before or not, but there's another stock a couple of years ago that I got involved in, and it turned out to be a complete dumpster fire. And a lot of it was because of the fact that they were recycling revenues into marketing expenses. Mm-hmm. And the problem with that company was that it basically wasn't able to retain customers versus Hims has done a phenomenal job with customer retention. And so while that marketing expense is high and they use a lot of that revenue to get more customers through the door, the customers actually stay. So a little bit different in this respect, and they've obviously seen great opportunity and growth because of that. So I'll eat crow on that one, but congratulations to everybody that's been in, especially Chris from DDI. He's been a big proponent for quite some time.
Yeah, his average is in the single digits. It's pretty impressive. I'm like, he's happy at 17. I'm like, sweet, 17's great. Tevis is like, oh, like 12 is good.
Dude, my average is actually higher than yours now because of how heavily I bought when this thing was falling, like 24, 23, 22, 20. I think my average is like, $20 flat right now.
Yeah.
But yeah, then I have a bunch of leaps as well that are up well over double for 2027 and 2026. So
Sweet.
No complaints on my part.
Yeah, and honestly, in a bull market, like I almost didn't put, when I did my portfolio update, the share price, just because I think it's kind of nice to see in a bear market because you're averaging down and you're showing folks how to do that. Yeah. In a bull market, like your average doesn't really matter that much. Like it does because that's the percent that you're getting, but it gives the wrong idea that the goal is having a low average so you can show off and be like, hey, I'm up a 3x versus, like Palantir, I stopped adding, like I didn't add hardly any. I'm like a little tiny bit above $20. So my average is like 12 and some change. But if I had bought, like when it fell down to $20 in that yen carry trade, I was tempted. I instead sold cash secured puts, made out like a bandit with those. But if I had just bought the shares, like it'd be a lot. It would be a triple, and I'd have a terrible average. It'd still be really good, but yeah, it's one of those things that especially newer traders can get caught up in and be like, I don't want to ruin my average and my cost basis. The question is, are you still bullish on the company? Is the thesis intact? And do you think that it has a lot to rise? If so, and if you're under allocated, if you're like, 75%, and you're like, hey, that's a lot, fine. But if you're under allocated to it, you buy.
Yeah,
I agree.
I think like with a lot of stocks right now is they're all getting price discovery at the same time because of the money that's actually flooding back into equities. And so if you were never in SoFi, let's say, but you're only reading it for the first time right now, and you're saying, oh, wow, why am I buying the top here at 15 or 16, even though it was at 7 3 months ago? It's because it's getting price discovery and it's getting re-rated by the market as a result. And it's same thing for Hims, right? Like Hims is breaking all-time highs pretty much every single week. And you don't really know where that thing is going to land because the companies are fundamentally sound and they're executing consistently and the management teams know, and they have a good growth plan ahead. You don't know where it's going to land because you don't have any history from a technical perspective. You don't, like price discovery, I think is a powerful thing. And I think that it's going to spook some people out because they see it at 13 in September and they see it at 30 in, what are we, in November, December? And they say, I don't want to buy this thing. This is way overpriced. And then, February comes along and we're at 55 and they're like, oh crap, why didn't I buy it? Because it had much more to run. And I think that's the risk you run, especially in a bull market where everything is going parabolic to this sense. Now, at the same time, only buy at those levels. Like if you've done all the research on Hims and if you're bullish on the company and if you're like, okay, I trust this is going up, or SoFi, let's say, you've done all the research, you're bullish on the company. Should you buy at these prices, SoFi at 16 or Hims at 30? Only do so if you're okay to also be buying when it pulls back, or if it pulls back, another 20% or another 30%, because both scenarios can happen. Like Hims can just as easily go back to 20 as it can go to 45. So prepare for both.
So Matt, I'm kind of curious with your portfolio. Are you at the point where you're like, hey, I want to lock in some gains and have a little bit more cash as the year turns? Or are you looking to get in something new, or just average up or down in some of the names that you're at? I know Rocket Lab is one of those you'd love to fall and add more, but like how are you managing your portfolio right now?
It's actually pretty funny because I get a lot of people are like, oh, space is awesome, you should get into this, it's the next Rocket Lab. And I'm like, Rocket Lab's the next Rocket Lab. Like I I'm not saying that it's going to be able to triple or quadruple in the next 12 months like it has, but there's still a lot of catalysts, and to me, I don't want to buy crumbs. I'd rather, if there was a space winter, I think I just messaged somebody this. If there was a space winter, the companies that would likely survive are Rocket Lab and SpaceX. And so why would I really want to be involved in any other ones than that? And the only one I can invest in publicly is Rocket Lab. But anyway, going back to your specific question, if I see something, I'll potentially grab onto it. I haven't really been looking for another opportunity. I think Rocket Lab for me has been enough. The thing that I'm mostly concentrating on personally is understanding. Well, let's just be blunt. Let me take a step back. It's been a great year. And with that, I've kind of just started to look at what the next step is in terms of the growth, right? You kind of hit these plateaus within your portfolio where you're like, oh shit, wasn't expecting to be here. Now we're here. What are we doing? Like, what's the thing that'll get you to the next step? And to me, it's always getting to that $8 to $10 million range in the portfolio. And so I'm just sitting here trying to think, what do I need to do from here to really get me there? And I guess, sorry, I want to take a step back because I might have said something. I don't necessarily mean 8 to 10 million specifically in stocks, but just overall sort of equity in real estate or cash or businesses or something of the like, which at the moment is probably 70 to 80% in some sort of stock portfolio. But the real estate side is growing pretty well as well. But anyway, these comments. But for me, I mean, I'm adding some Bitcoin as much as possible. Still dollar cost averaging a little bit on Rocket Lab. I bought a little bit today, not a lot, but and then what else was there? NEXT is one that I've been starting to look at, and just looking at the portfolio, right? And I think these sorts of times are perfect for when I think a lot of people just add additional positions, because it's easy to add additional positions when everything is running and making money. But these are the times where you really need to understand, am I buying onto this company, or do I really want to be involved in this company because I believe in it in the long term, or because it's a hype stock and I'm just adding as much as I can because it's risk on in the market right now and everybody's making money and everybody's, drinking and having a good time. So to me, before you get into this place where we start to have a little bit of a frothy top and things start to fall over a little bit, it's good to take the opportunity to look at what are the things that I actually want to hold into the next 2 to 3 years. And that might not be your style. Like, that's my kind of style. I like to look at things on a 5 to 10 year time horizon. So if I don't really think I'm going to hold it for that long, I'll get rid of it. So I got rid of NVIDIA. I made a little bit of money on it. It was like a 10%, 20% gain. I don't really check, and nor do I really care. But it was just a quick in and out. Held it for like a month or two. And I think I consolidated that and put it into Rocket Lab and NEXT, which is next decade. And I'm trying to think if there's anything else really. The portfolio is really shrunk in the amount of total positions. But another part of your question, no, not necessarily taking a lot of profit. I still think that the opportunities that I'm in still have another leg up to go. Does that mean I might eat some short-term paper losses? Of course, and I'm okay with that. And a lot of these positions, Palantir, Rocket Lab, etc., I was sitting on major losses before this year. Well, maybe not Palantir sitting on major losses this year, but you know what I mean, over the past several years. So It's nothing strange. I'm not necessarily looking for taking profits. This might sound really conceited, but if I need the money, I'll just take a loan out against it. That's sorry to say, right? I mean, I don't really need to take profits. If there's anything that gets too frothy, like if Palantir goes to $100 a share or something like that, then maybe I would. Or if Rocket Lab went to, I don't know, 70 or $80 a share, I probably would. But it's just too early for both of those right now.
Yeah. No, and I've got I think that's really key, is to know why you're getting into a name. Like it's a fine thing to do a swing trade. Like if that's your style, maybe you're a full-time swing trader or day trader, whatever, great. I'm primarily an investor, and but I use a small percentage of my portfolio for swing trades. It's 2.7%, so nothing massive for me, and I usually keep it there. So I do swing trades on a limited basis. I've been pretty successful this year. Not as successful as my overall portfolio, but as I make money, I just throw that into my main portfolio and put it in something real. I'm in 10 names right now. I'm not looking to add another. There are a couple of names that I'm looking at as potential long-term positions. I don't think that I'll probably get in them. But if I do, I'll probably end up exiting something else, because I feel like, at least for me, I have the brain capacity for maybe 10 names. We'll see how it goes. This is more than I usually have. Next year, maybe I'll add one all next year, or if I exit one, I'm willing to go up to like 11 and just increase it just slightly. It's kind of like, doing some reps, but I don't want to have like the portfolio that Tevis had, 6 months ago, where he's in like 50 different names, and he's basically he's basically the NASDAQ 100 at that point. So that's fine, but it's not for me.
I cut it down significantly, and I'm going to cut down. So right now I just checked, because when I had the dividend portfolio, it was completely different, and I was just going for just an experiment essentially. And so I was in 42 names, and now I'm in 18, but that includes all the crypto as well. So like 4 or 5 names are just crypto. I want to get that down to 10, and that's an easy cut, because Marathon, CleanSpark are going to be cut. ETH is going to be cut for Bitcoin. Coinbase is going to be cut. TSLL is going to be cut because I'm going to go properly back into Tesla. I'm just playing TSLL right now for the volatility, for the short-term moves. And so, I think it's going to be fairly straightforward. Like, I already know what I want to cut. I'm just waiting for the catalyst to hit. And, similar to your point, like, yeah, a bull market as we're in is a great time for you to put on swing trades if you're short-term bullish on a momentum shift on a particular name, but go into it with eyes wide open and know your price target, your entries and your exits, and treat it just as a trade. And don't be afraid to, if you're down, cut it. If it doesn't meet your thesis, if you're up, take your profits. Don't get greedy, because you could very easily get stuck holding this thing and turning into a long-term investor when you started out as a trade. Don't do that. No. And I say that from experience, having done that myself.
And knowing why you're in it. Like, if it's a trade, keep it as a trade. And there's an exception. Like, the exception is that the company develops, or you realize something about the company. You're like, hey, I want to be in this long-term. I did that, of course, with Robinhood this year. Went in fully with options, those printed. And I'm like, you know what? I want to be long. Even, I think my average, let's see, it's $30.61. Terrible average. But I'm like, long-term, I think it's a phenomenal company. And I'm just using gains that I made from options. So it feels like free money anyway. But no, I'm very happy to make that pivot. But, so oftentimes you go in and you're like, oh, yeah, this is just a trade. And then they have a terrible earnings and you're down like 30%. And you're like, well, I guess it's a long-term position because it's undervalued now. But the other thing too is sometimes you'll get in a trade, and it's good to know the timing or your goals. So if you're like, hey, I'm in this for a double, if you get that double, take the double. Like, that's a great win. Or if you're in it for a 30%, you don't need to double every play. Like Cooler is one of those. KULR. It's a micro cap stock. They have like nuclear clean energy stuff. On a trade, you don't need to know and have much DD. And I just was like, sure, I'll buy some 2,000 shares. I didn't quite get a double on it. I sold well before the peak, what it did today. Like, it really, really ran. But I'm like, I'm going to take the win and I'm done. I'm out. That's good enough. The other thing too is know your time horizons too. So, there's some swings that I'm in. I'm like, hey, I'm in this for, I don't know how long, but it's probably, a couple of quarters. Sometimes it's like, hey, I think that this is going to happen. I'm in it for these 2 weeks. If it doesn't happen in a couple of weeks, or something changes, I'm out. Like Celsius, I took a big L on that one before earnings. I'm like, hey, it's probably overdone. Not a major position. I only bought options, and I'm like, hey, I'm out in 2 weeks. I bought options further out, just so it wasn't just state of decay to nothing. But I lost like 20% on that, and I'm like, hey, it's not a trade. I'm out. It's good.
Yeah. So Matt, let me ask you this. We recently got news. Maybe I can throw it up. But we recently got news that SpaceX is discussing a tender offer that would value them at $350 billion. Now, the interesting part here is because Rocket Lab is one of your big bets, and Rocket Lab has a whopping market cap of $12 billion. And so my questions to you are, as the second player in the space, is Rocket Lab going to get a pump on this news? And if so, where do you see Rocket Lab being, considering the fact that SpaceX is now $350 billion? Like, Rocket Lab can do a 10x and it'll still be less than half of what SpaceX is. And the 10x would be $240, stock price for Rocket Lab. So I'd love your thoughts on that.
Oh, don't threaten me with a good time. But yeah, and speaking of tender offers, thank you for tenderly offering me to come on to Btlg Wkly, because it's such a pain to. So anyway, just joking again. But no, it's interesting times. I could see a place where Rocket Lab could double on the speculation, but there's still so much ahead of it from a catalyst perspective, right? I mean, they don't have a medium launch vehicle on the pad yet, right? They're still getting themselves into the opportunity to compete and break up the monopoly that is SpaceX, and most specifically the Falcon 9 rocket. And that's just a piece of it. And then following on with that, there is yet to be a formal announcement as to what Rocket Lab's competitor constellation would be. So Rocket Lab has stated openly, maybe hinted at, but they've basically said they want to be an end-to-end space company that really tries to emulate the success that SpaceX has had. And so that means basically getting launch right. And they've done that well with the small launch vehicle. They will do that well with the medium launch vehicle. They'll try to break up the monopoly that is the Falcon 9 rocket. But then following up with that, they want to compete against Starlink, maybe not necessarily in the communications or internet space, but with something, right? So it is going to be a constellation of sorts, whether it's going to be based off of providing opportunities and intel to the governments or other communications companies. Nobody really knows as of yet. And I think the company is intentionally keeping it quiet so that way they can get Neutron to the pad and actually start launching the constellation up into the air and take advantage of it. But to me, I think as a number two in the space, there is kind of an open ceiling up to that 350 billion mark. I don't necessarily think 350 billion is where I would put Rocket Lab, but it just goes to show that if you can be successful in this space and you can show the value, you can truly open up the opportunities going forward in terms of the market cap. And to me, it just goes to show you that the price to sales can be, specifically right now, on the order of 20 to 30x for these companies, considering that they're growing at pretty impressive rates. So I think, for example, I think this year SpaceX is going to, and this is fiscal year 24, keep in mind, $13 billion in revenue. And a lot of that comes from the Starlink business, but some of that also comes from the launch business. And they were able to launch a crap ton of vehicles this year and did a good job, meaning specifically the Falcon 9. Obviously, everyone's been following the Starship as well. So there's other things, right, that are coming down the pipeline that will happen for Rocket Lab that will start to emulate and show up like a miniature SpaceX. And so I wouldn't rule out that being a tenth of the value, which would be about a double, if not slightly more, for Rocket Lab here, of SpaceX, so 35 billion, 24 to 35 billion isn't out of the realm, especially once we get three main things, I guess: medium launch vehicle, constellation announcement, and profitability. And that all will be announced or happen within the next 12 to 24 months. So a lot will still happen between now and
So
then.
basically, what you're saying is within the next 12 to 24 months, we will likely see $50 to $75 Rocket Lab.
No, what he's saying is you should have bought when he was saying it was $4 $4.
Roy, that's enough. All right. Yes, I know.
I could see it more in the realm of $50. I think $35 billion market cap or closer to $70 would kind of be stretching it. But keep in mind, I don't necessarily know everything, right? So it's hard for me to say what the trajectory looks like. I think it's going to take some time to get there. I mean, it really all depends on what people's time horizons are. In the next 24 months, could it get to a $70 price target? I don't think so. But I also thought that the year-end 2025 price was going to be $15. So I obviously got that completely wrong, but I also didn't expect the pendulum to swing so much. So it also depends. Like everyone's very much risk on right now. Everyone's very much into space companies versus 2 years ago. Nobody wanted to touch a space company with a 10-foot pole. So I think it really just depends on what the market is feeling. If you're talking about this, I guess, euphoria sort of playing into the next 12 months, then maybe it'll pop up to $50 to $70. But I think that there will be some taming personally. And so I don't necessarily think the $70 range is in any effect in the next 12 to 24 months. But I've been wrong before and I'll be wrong again.
Can you throw this up, Tevis? I think this is a good reminder. Do you guys remember this company, SPCE, Virgin Galactic? So, of course, back when it IPO'd, people were all excited about it. It wasn't 145. They did reverse split. They of course shot up multiple peaks, but 1118 as the all-time high. And some people sometimes, like, it's tempting, especially when junk is running. And you do you, like, if you want to trade this or whatever, you can maybe make some money, maybe not. But the danger is when you're really excited about an industry, you're like, hey, space is the next frontier. You're right, but you also need to know how to identify a winner. And if you instead got into Virgin Galactic instead of Rocket Lab, you would be down 95%. Or if you bought here at the peak, I don't even want to calculate that, but we're going to do that anyway. Yeah, that's down 99.37%. That's just terrible. Same thing with the EV industry. Tesla, back in the day, in 2020, 2021, people are like, oh yeah, like Lucid and Rivian, they're the next Tesla. No, Tesla was the next Tesla. Rivian hopefully won't go out of business. Lucid, I think, might. Like, it's down so much. And there's a whole bunch of other ones like Arcimoto that we just don't even talk about anymore. They've disappeared off the radar. So it's really important, if you're going to buy and hold something long term, to not just be right about the industry, but also to be right about, and finding a quality company. And it's better usually if you think an industry is going to do great and you've identified the quality company, to buy that at a high premium than chase something that appears cheap. That is a different kind of a value trap. So just be careful with that, guys.
Is there a space ETF, Matt, that also includes SpaceX? Do you know of any?
That includes SpaceX?
Yeah, I don't know. I know the ARK venture fund includes SpaceX, but I'm wondering if there's something that includes the space companies. I don't know, maybe.
I know ARK-X, so ARK Invest has the space exploration and innovation. So I know that it kind of blurs lines a little bit because it's not 100%, but the number one holding is Rocket Lab, and there's Kratos, Defense and Security, Iridium, Trimble. There's no sign of SpaceX in here because it is private.
Like, to Roy's point, I mean, that could also be another avenue for people who want to dip their toes in, but they don't necessarily know who's going to be the winner or how to find a winner. Like, I know that Jesse is doing something very similar with ARK-G that he's buying up, or at least he's buying leaps in it, saying, hey, this space, he thinks, is going to be going up. And a lot of these companies ride and die on like FDA approval and such. So why not just buy a basket of these names?
Yeah, with ETFs too, like, that's one of the challenges I have with ARK is they'll put like junk in their basket.
Yeah. The point being is like, hey, just diversify across if you're just bullish
Yeah.
on the industry.
But yeah, like biotech is one of those, like XBI versus ArcG. Yeah, I think biotech's gonna be very, very good next year. I have a little bit of ABCL. I don't mind a little bit more, but it's like less than 1%. But yeah, like you can see here, it's up 30% year to date, probably mostly because of Rocket Lab, to be honest, because it took off like right around the same time. But I would wager, and I'm sure I know we can pull this up. There's probably like Roku or something in here, like in space, because it's Kathy Wood, and sometimes they just don't have enough names, and they're like, hey, let's buy, some Lucid.
I'll bet you money that Zoom is probably in that ETF.
Oh goodness. Okay, yeah.
All right. What do we want to jump to next?
I did want to say this. So Harpreet Singh actually noted that Google actually has a stake in SpaceX. Believe it or not, 4 or 5 years ago, that's the reason why I started my Google position, was because they owned 7% of SpaceX at the time. Now, how much have they been diluted at this point? I don't know, but just a little bit of fun fact. That's when Maddie was a wee old dividend investor and didn't know anything about buying growth companies. And so the pendulum has definitely swung, and I've been doing a lot better since then.
You were wheeling dividend companies? How were just like a little bit of extra premium on top? Because I can't imagine you got a lot.
I wasn't wheeling dividend company. I didn't really sell much covered calls at all back then. Now it's just buying dividend companies and holding them for the dividends.
Yeah.
And I don't want to go down that rabbit hole, but I basically got to the point where I was making a decent amount in dividends, and I was like, at 30, 31 years old, I don't need to be focusing on dividends right now. I need to be focusing on getting to the 8-figure mark.
So here's the holdings of ArcX, the major holdings. It's not all the holdings, and so of course Rocket Lab is right there. Iridium, I don't know some of these names. Archer, I know it's at least kind of in the space. Trimble, don't know. Arrow, that one sounds like it is. Teradyne, I think is. L3 Harris is sort of. It's a defense play. Blade Air Mobility. Amazon.com, that well-known space company.
Yeah.
I guess Blue Origin, I don't know.
I was just thinking about that. Does Amazon have a stake? I don't think so.
I don't think so. Like, it doesn't make any sense to me, but this is like 3.82%. That's just kind of the way that the ETFs go, is sometimes you put names in there that just...
It might be because it's actively managed, right? And she uses large caps as like her cash position. So that might be what that is, but I'm not sure.
Yeah, let me... And there's Fuller Holdings too. I should have just shared the whole window. I don't think we want to go through all these names,
Anyways,
but I mean, I'm sure we're going to find some. Yeah, so like Palantir. Well, here, I got to blow it up. Palantir. It's like, yeah, you can say that. I mean, they are the operating system of the Space Lab or Star Lab. Joby, another one of those AVTOL companies.
Yeah,
Garmin, I don't know. Like John Deere.
Garmin's like a GPS company.
Google.
So Amazon, I want to bring in here. Google might be because they have the SpaceX aspect, but Amazon specifically, they have a thing called Project Kuiper, and that is specifically going to aim towards basically what Starlink is. It's basically providing global broadband internet for cheaper than what is currently available. So I think that might be why, and I know that's part of the reason why there's a decent bullish thesis about Blue Origin and Rocket Lab demand, because obviously Uncle Jeff wouldn't want Amazon to be using SpaceX.
Yeah. I mean, honestly, I a lot of people had hope in that, and I was just like, I don't understand. Some things you just don't want to compete with Elon Musk on, and space is one of those. Although most industries have multiple winners, 2 or 3 big winners, and there could be some others that carve out a niche. I think Rocket Lab is showing that. So,
Food says, can we get to the real meat of all this? Who is the best investor here?
Matt.
Yeah, I would say I'm the worst out of these 3, just given the fact that I was in SoFi for so long. But Roy was able to catch Palantir. Roy was able to catch Robinhood fairly early. Roy was able to catch HIMS. Roy was able to catch SoFi. Matt was able to catch Rocket Lab. And so yeah, there's a
I'd say
reason
Roy for sure. Roy's doing good work, man.
his
Yeah.
portfolio is up like 200% year to date, something ridiculous, Roy.
It's my main portfolio is over 200% now.
Good looking and smart.
Yeah.
Yeah.
But he's taken, ladies.
Dangerous.
Back off, June.
That's right. Got the ring. No, it's been a good year. Not every year is like this. And well, so one of the things too, and Matt, you kind of touched on this a little bit, and Tevis, you some of the things you mentioned too, like the gains that we're having this year are not, because like at the beginning of this year, we picked the right companies. For us, a lot of these are companies that we were in a year, 2 years, 3 years, 5 years ago. And a lot of them for us, maybe a few exceptions, were things that we either identified during the bear market as like, hey, I'd like to get into that at the right price, maybe in the future, or we're just like, hey, I'm buying a lot of this, even though it may not go anywhere for a couple of years. Like whenever you're buying those companies, like it doesn't necessarily feel good to buy and it just instantly the market goes down. And those days are not too far removed from us. That's like a year and a half from where we are today. But bear markets, if you identify those quality companies and you have the cash and you can average down and hold and just hold as long as the thesis is intact, no matter what the price is doing, man, eventually it pays. And that's what's happening right now for, I think, all of us.
Yeah, I mean, I definitely could have had better moves. But I think that a lot of my time was spent accumulating just so that I could build massive positions in some of these names. And I just think that anything larger would have been somewhat reckless of me with my portfolio. But then again, you have Matt who's doing, larger moves on an aggregate and on a percentage basis. So yeah, there's lots of learnings there. But for me, I've done, I think, fairly well over the last couple of months because my top 3 positions, Bitcoin, Tesla, and SoFi, they're not like 5 or 6x, but the 3 of them combined were like 70%, 80% of my portfolio. Like Bitcoin's at 20, SoFi's at 27, and Tesla was at 34 at some point. So I don't know, somebody do the math. But ever since Trump got elected, essentially, like I've had a great month. But in terms of multiple expansion and compounding out those percentages, like nothing comes close to, what you guys had with Rocket Lab and Palantir and others. And I was in Palantir. I bought it at $7.
I remember that. Yeah, come to think. Didn't you say that SoFi would outperform over that year? How'd that turn out? Remind me.
I wish I was a year later on that prediction. Like I wish I was doing it a year later. But
I do have to say, I don't know how Tevis might scold me after for saying this, but we were on a nice beach, drinking mojitos and God knows what, in February of 2024, just 10 months ago.
Yeah.
And he's like, you know what, Matt, you have money, just throw this $20,000 bill at SoFi.
Yep.
Who listened? Yeah, I listened, and I've been reaping the rewards of that, and I've actually doubled the position, and it's a nice $65,000 position now. It's up about 100%. So, congrats to me. But what was I telling you at that time, Tevis?
Yeah, to buy Rocket Lab at like $4.
I should have just gone on that trip with you guys, and then I would have heard about Rocket Lab sooner because you never mentioned it. Just kidding.
So here's the thing, man. With Matt's portfolio, and I think everybody who's watching already knows what Matt's portfolio is. $20,000 to this man. He literally threw it into SoFi, just a random conversation. I honestly still to this day think that he did it just so he could give me shit for like the rest of the year about it, because I would hear every single week, every other week, what happened with SoFi? You want me to go broke? You hate me. I always knew it. And then when SoFi went up, he was like, "Oh, why didn't you buy Rocket Lab?" So don't let him fool you.
Oh, that was worth $20,000 to him for sure.
It was worth $20,000, 100%.
It's like I make money or I get to heckle Tevis, and heckling Tevis, like that's why we have this show. Honestly, like that. Talking stocks is great, and talking about plays and interacting with the audience. But to make fun of Canada and make fun of Tevis a little bit. It's good times.
Yeah. Did you guys see this? The new 51st state flag just dropped.
Oh my God, I love that.
The little maple leaf.
Yes.
Oh man, too good. Yeah, 20 grand for Matt is the equivalent of saying, "Yeah, sure, I'll bet $100 on this shitty bet."
Yeah, that's me throwing it, a little bit into GameStop, this a couple of weeks ago, and just selling premiums. I'm like, hey, swing portfolio, whatever. If it goes down, whatever.
You know what, man? Like, I really like, and I mean, I will eat my words that I said months ago, because I'm really getting super hooked on selling options, and I sort of regret waiting so long because TJ was basically, asking me to do that like this time last year and walking me through why it's a good idea and whatnot. And I could have been doing it for so much longer. So to the 170 something people watching across both of our channels, that is one of the benefits of having a strong community of like-minded people that you can bounce ideas off of. So luckily I have these guys. The thing that I will say is that it's making me really think outside the box in terms of how I allocate money. Because I'm just, to TJ's words, like, I'm treating everything as a business. Like, if you're not making me money, then I don't understand why you're here. And it's allowing me to then take outsized positions where I don't feel too much FOMO. Like, for example, I want to go into Nubank, and I mean, Roy, it just goes back to the conversation we're having a little earlier. I want to go into Nubank, but I don't really want to lock up that money because I'm using that cash right now to do cash secured puts. And so probably how I'll start dipping my toe into Nubank is by leaps. And that's something that I'm, for the first time, introducing more into my strategy. Like, I have leaps on HIMS, I have leaps on SoFi, I have leaps on a bunch of other names. And so I never really used options before. I never really used leveraged bets. But when it's coming from the proceeds of me selling options to then go ahead and buy options and then essentially, buy outsized bets of leverage, like, that really just rewires how I'm just thinking about my portfolio. And I don't get as much FOMO because I don't need to build up Nubank and, deposit my paychecks essentially into, like, that's not the only form of me getting new capital into the account. And so I don't feel like I'm having any trade-off because I'll just sell against it and then use that proceed to buy leaps. And then I have some exposure. It's not going to be life-changing, but it's going to be exposure. And I think that's one of my big learnings from this year. Of course, I understand that I'm sort of fully acknowledging that it's not going to be as smooth sailing as it is right now, but it's still another tool to have in your tool belt. And for that alone, I think it's important to chat about.
Yeah, and the thing that I love most about options is if you take a 50,000 foot view, stocks are very much like up, down, sideways, and that's pretty much all you can do. But with options, there's really so many different ways that you can utilize them. You can use them as hedging, you can use them as risk management, you can use it as income, you could use it as leverage, which you kind of stated with respect to leaps. But the thing is with options, you really need to be on your game and really kind of understand, because you can get yourself into trouble very quickly. Because if you're trying to use it for leverage, you can lose your 100% of your position very quickly. And so, take it with a grain of salt. Try to walk before you run. Not saying that options are bad. I use them all of the time. They're in my portfolio very regularly. But just be recognizing what the right tool is, right? Because if you're trying to build a house, right, you need to start with a firm foundation, and you don't just immediately go in with a hammer. So you really just need to understand what's the right tool for the job. And so with that, that's how I kind of look at options. Just make sure that what you're trying to do is what you're really trying to do, because I think sometimes people might see what other people are doing, like what TJ's doing. I'm not saying what he's doing is wrong. It works for him, but I don't like to sell things super at the money, right? Like I like to sell things. It depends on the company though. Like sometimes I'll sell in the money puts, but most of the time I would say I would do things super far out of the money. And so people might think I'm a grandfather. I think Tevis, I've showed you some of the things that I've done, and you probably call me a grandfather by being so far out of the money. But it really just depends on, each individual person's risk tolerance and what they're using the option for, because you might be using it completely differently than the person next to you.
And I'll give some advice too on leaps, in case someone's thinking, like, study what they are, figure out every aspect, know the Greeks, know how they work, know what your targets are. Like if you're planning to just hold and then sell in like a year and a half or 2 years, great, that's awesome. Or if you're like, hey, when it doubles, I'm going to sell half my position, and then when it triples, like figure out what your plan is before you get to that moment. Now, if the situation changes, you can make changes too, but have a plan, because these are timed. You have to get out. Like stocks, you don't have to have a plan. You can be like, I like Amazon. I'm going to buy Amazon. I don't need the money for a while. Great. Like just let it play out. That's a great thing about that. A lot of times people make the mistake of doing leaps like as far out of the money as they can, and those sometimes will work out. Like you did that on Palantir, man, you just printed a bunch of money. But a lot of stocks will not go up that much, even in a bull market. And as a result, theta decay, that's time decay, will just continue to hit you and hammer you, especially as you get nearer to time. And so I usually prefer close to the money leaps, or even in the money leaps sometimes, depending on the stock. So like I only have, I think, 3 positions that I have leaps on. Leaps are only a small part of my portfolio. Most of it's just stock because it's stable. And I only do it in names that I have a large conviction in, that I think will do very well over the next 2 to 2.5 years. And I also think that they're undervalued. So it has to be like the perfect storm. And so SoFi at like $6 and $7, I was loading up on leaps for 2027. So as far out as I could get as far as time, and for a $10 strike. And I was like, I was looking, I'm like, okay, there's always a chance that, SoFi doesn't get above $10. Like if it's trading by price to tangible book value and we go through a bear market, and there's always a chance. But like realistically, I'm like, okay, there's a pretty good chance that SoFi gets above $10 by that time. And sure enough, here we are. And they don't always respond that quickly as well. But Nubank is another one where I have $17 leaps as far out as far as time. And then PayPal is the only other one that I have. I have $90 leaps. It's at like 80 something bucks for December 2026. So almost as far out as I could. I was buying those before, initially before the 2027s were released. But yeah, very conservative. I think, some people, like, if you don't want to do options, don't do options. But yeah, just, keep those things in mind. Appreciate the risk. Don't go all leaps. Like some people, one of the worst things is if it's your first time playing with options and it just prints. Like you buy right before the run up, $10 strike for SoFi, and you've just printed money. You're up 5x. You're like, this is great. Why don't I just sell this stupid stock and go fully into leaps? Well, stocks correct and markets don't always stay bullish. And if you did that like in 2021, right as 2022 came, you lost 90% of your portfolio. That's a big risk, and it's timed. So you can't just sit there and hold it indefinitely. So appreciate the risk, know what your goals are, be conservative.
I think that's just good advice in general. I think also the idea of, I would say the majority of people just buy options to flip them, because if they would buy them and they appreciate because they appreciate more than the underlying stock because they're a leveraged asset. But in the case of SoFi, it's now like I have options that are expiring in January for $15, and I'm honestly considering just taking assignment to those shares. And so I'm actually, in this case, using options for their intended effect to actually take assignment at a certain price, which is also interesting. But yeah, options are always a very small percentage of my total position. I think for SoFi, like my total options position might be, something towards 10% of my SoFi position. So I'm not messing around with large amounts, because I have been in situations where it's just gotten cut in half And with options, I usually have a very hard and fast rule, especially if they're not leaps, pretty much exclusively if they're not leaps. If I get a double or a triple, like I'm out, or I'm at least out half. So I take my principal out. I remember back in, I think it was 2021, like I bought options on Disney, and Disney went to like 180, 190, and I had like 200 something strike. Basically, they doubled because I had so much time and I didn't sell out, and I left them, and they eventually, I had to take a loss on them. And so with options, because they're so volatile, like it forces me to always be babysitting them to some degree, and either sell out or try to determine whether I want to take assignment or not, or roll them to some other strike. Like I'm just saying, it's another tool. It's not necessarily like the thing that people should flock to exclusively. And
Yeah.
And I think one thing that's really interesting is most of the time when people think about long leaps or something like that, they're thinking about those things that are, 100% out of the money, that if it goes in the right direction, it's like that has a time and a place. I'm not going to say it doesn't. But for example, you might just want to be long the market. And for example, I'm just going to throw something up here. So $600 SPY's at $600 today, right? And if you're looking at January 2027,
do you want to share your screen?
Sure. I was just going to talk through it, but yeah, you're probably right. So, I mean, SPY's at $600. Let me zoom in here. So SPY's at $600. Everybody kind of knows that. But what if you're saying here, like, I just want to be super long the SPY, but I really want to be in the money, so that way I don't have as much theta decay, right? You have basically you're so much in the money that it's basically just intrinsic value, not extrinsic value, where you have theta decay impacting you over time. If you think about it, if you were to buy this 420, so basically 30% below the current SPY price, this 420 strike on SPY for January 2027, it's going to cost you $22,000, right? And that's a lot of money. But if you think about it, if you wanted to buy the same 100 shares, it would cost you $60,000. So now, if you think about it, you could potentially control 3 times as much. And so if the market does sway in your direction, now that we're looking, the fact that we're at a 98 delta, so it's basically a dollar for dollar increase. If you go to $700, by the time you get to the 2027 time frame, you're going to be controlling 3 times as many shares that if you had just bought the SPY alone on its own. And so if your prediction is right, you would do well. And not only that, but if you have an account that allows you could write poor man covered calls on this and generate income just like you would for a normal SPY position with 100 shares. So there's so many different ways. It really just depends. You could do multiple different tails, but it just goes to show you, it's not just up, down, and sideways anymore. It really just depends on what you want to do. And with that, you can get yourself into a lot of trouble if you're not disciplined and really on top of it. So
in this case, Matt, I'm curious how you would play it, because I have calls that I've bought for leaps, right? And so, like, let's say in the case of HIMS, right? Like I have HIMS leaps, and I bought them for leaps, but it just so happened that HIMS is super volatile, and then these things are up like 3x, 4x, 5x, but I still have 2 years left on my time horizon. Like, at what point do you consider cutting that, or do you just hold it blindly because you have so much time horizon left and because this thing has run? So like in the case of SPY, like if it ran up 50% towards your price target in the next week, the amount of leverage that option would carry is much higher. Like, would you ever let it go much earlier, or do you usually, when you buy your leaps, hold them at least a year if you're buying a 2-year or a 3-year leap? Like, I'm just trying to get an idea. I know it depends on your goals, but I'm asking you personally.
No, yeah. So I'll just give you an idea. So I bought, this is back when the earnings just came out. So we spiked up, Rocket Lab spiked up to like $23, came back to like 17 or 18. And then it's been on a run ever since. But the thought process around that was when it came down to $17 or $18, I bought some of the $5 and $7 calls, and I was buying these for like, I don't remember, like 12 or 11 bucks, and now they're doing okay, I guess you could say. Today they're down pretty significantly, but regardless, before then they were doing rather well. What I'll do is I'll sell these. I meant to do January 2027s. I was wondering why they were a little bit lower value. So, see, I was buying the 5 and 7s. So, what I'll do is I'll have these for basically ownership for two and some years. But what I'll do is I'll look at what the current strike is, 24, 25 bucks, and I'll say, all right, well, let me just write some covered calls, right? And if that's really what you think, what's the worst that happens, right? Or not covered calls, poor man covered calls. What's the worst that happens? It gets locked in, like it continues to run, So I basically, for Rocket Lab, for example, I have obviously some shares, but I also have some leaps. And so I sold $40 covered calls, I think, for next week today. And this is before it dropped pretty bad. I sold them for 20 bucks. Now they're at 10. So, you can lock in some of that if you want to. But it also just really depends. Like some people, what they might do in your example, Tevis, if you're really up 300%, is they might sell their initial money out or take half their money out and leave the rest to ride, and just say, you know what, I'm playing with house's money at this point. If it goes to zero, it goes to zero. I still made a little bit of profit. But if it really wants to run, at least, you might kick yourself for not having enough, but you won't kick yourself if it goes to zero, which always can be the case, depending on what kind of option you have, right? So it just goes back to, whatever some people are wanting to do, and what their bet is.
Just know those, usually it's best, check on what your broker, like if they're actually coming in the money and you're near expiry, they fulfill a little bit differently because you have an option as collateral. And especially if it's not deep in the money, you have some extrinsic value. So you want to, usually you're better off selling the long leg, so selling the option that you own and then buying back the short leg. There are exceptions, and it depends on the broker. Just know there's a little bit more risk with poor man's covered calls. Not every broker offers it. They're a little bit more tricky too, because there can always be an early exerciser that just throws off all your plans and everything. So, study that one a lot more, and waited a little bit on it, Tevis, and anyone else who's listening before you jump in that. But yeah, poor man's covered calls are really nice when your contracts are deep in the money. Like the Palantir, I had $10 strikes forever that I could not sell poor man's covered calls on in Webull. Once I switched over to Robinhood, I'm like, all right, it's go time. This is great. Mm-hmm. But I had time. The one good thing is I had time to like really study up on the poor man's covered calls and like really understand the risk, that there was more risk than just a regular covered call. So yeah, that was helpful.
Yeah, I think the brokerage will ask you to sign some waivers, because I think technically it's level 3 options to sell poor man covered calls. Yeah. So, and same thing with naked calls and I guess puts on margin, selling puts on margin rather. So people often give me crap if I take a screenshot. They're like, why are you trading on margin, bro? And I'm like, well, I have I'm level 3, right? So everything shows up kind of as margin. But I try not to use it. So.
No, I do use margin. $1,000 as a Robinhood shareholder, because it's free to use and it rounds out some of my trades. I usually don't, but it's there just when I'm like, oh man, I need an extra $300 for this. It's like, all right, there we go, and make sure that that's paid back. Not much risk with that, but yeah, I don't. But the deep in the money leaps it's not margin, but it's like that, just because you can really compound your gains if it's a stock that you're confident in. And so like the SPY, like that's the American economy. So as long as you think it's going to continue to go up, there's also less risk. Like if it goes down, you're going to lose some money, but a lot less than if you're like at the money, or even like you're buying out of the money calls. And so I usually on those, I haven't done deep in the money leap. I think it's been over a year. But usually I aim for 90 delta, just so you have a 90% simulation of the shares at a fraction of the cost. And it's a nice tool too. Like, there's a lot of tools in the market. You just have to figure out, spend some time researching them, figure out what you're comfortable with. If you're not comfortable with options, guys, I know they're all the rage right now, and I love it as a Robinhood shareholder, because I mean that's fueling those gains for the stock. But don't do options, even if your friend's doing it and you're jealous of their like. Just don't touch it if you're not comfortable.
Yeah, I think that's great advice. Hawaiian snowblower mechanic says we're hiring for snowblower mechanics in Hawaii if anybody's looking. So just a public service announcement there. Roy, do we have any other topics, especially since we have Mr. Matt Farley here?
I think we pretty much covered. I guess I'm kind of curious. We hadn't talked about, like, if we just want to kind of close on the segment and just barely touch it. I don't think that we've talked since I mentioned this, but we talked maybe 6 months ago, 8 months ago about Google, and I was very, very bearish on Google, not bullish.
We all were. I think both of us were.
Yeah, both of us were. We kind of tag teamed Matt, and I think, in some ways we were right, in some ways we were wrong. I've now shifted to neutral in Google. One of those biggest things is just getting the Pixel in my hand and just seeing what they're doing with the integration of Gemini and the way that they're selling some of their products versus like what Apple is doing. I had, like, in the Mag 7, I had Google, and then right underneath them Apple. And I still stick with what I said on Apple. Like, the innovation is not there. But Google, they've been impressing me on a couple of decisions they've been making. I think their CEO has improved. And so I'm happy to see Sundar Pichai develop a backbone earlier in the year. Of course, the AI innovation continues to roll on. Not everything is perfect at Google, but I'm just kind of curious. Are you just, kind of holding and happy with Google where they're at? Are you like a little concerned with some aspects? Are you more excited, or
Me or Tevis?
You, Matt? I don't
Sure.
care what Tevis thinks.
Yeah, who cares? Nobody ever did. So no, just messing. The thing that still bothers me is the culture a little bit. It has seemed to improved a little bit, but it might just be because it hasn't been in the headlines the past couple months. I still think that there's risks, obviously. So the DOJ is still going after them. We'll hear that news before I think they said the end of the year, likely, with respect to if they're going to make them sell off Chrome as a web browser due to monopoly reasons or something.
Yeah.
Then there's just a culture piece in general, but I think that overall, and generally, if a company has bad culture or has a toxic culture, I generally will stay 10 feet away from it. But I think that the margins are so good at Google, you can almost offset it, but it's still the thing that bothers me most at Google. And so, to me, I think that you can't put a price tag on having a phenomenal cloud business, which is just really 24 months into its infancy, generating a crap ton of profit and growing very rapidly. I think the run rate now is over $30 billion a year and growing at 20 to 30%. So starting to do extremely well there. And then I think overall, just YouTube and Google search, I mean, it all just does absolutely phenomenally. I'm not adding here. I am reinvesting the dividends, as small of a portion as that. If it were to drop extensively, I would probably add. But more recently, I've just seen a better opportunity in like Rocket Lab and things the like. SoFi more recently I added as well before this most recent run up over the past couple of weeks. So that's where I've been allocating a lot of the capital. If there were a big drop off, I might consider it. But that's a good question. It's still in my top 5 of positions. I don't hate it. I've probably become, I don't know. I'm trying to remember what the stock price was when you guys were poking.
I think it was like 150. Like it's not gone up a lot, but it's up some. PE is around 20. Forward PE is around 120 as well. Okay. I think it was right around 150. So it is up, but and at the time, like, even though I was bearish, I was like, it'll still go up. It'll still be fine. It wasn't like it's going to zero but you know what, some of the things I said, you know, as far as like, well, towards their CEO and as far as their innovation level, I think we're just flat out wrong. So, but yeah, I'm not bullish at the cult. I think you hit the nail on the head. You know, as far as it's concerns, like the culture is a concern. They still do have an innovative core, though, unlike Apple, which is just a joke at this point, honestly.
Yeah, I've always been bearish on Apple for like the past. Well, I don't want to say bearish, but I never was a fan of buying it. But that and Tesla, I would say, I've always been wrong on. You know, and I never wanted to buy them because I always thought there was something, you know, more that, or there's, how do I say this? Apple, I never thought they would be able to sell as many phones as they did and how much profit they were able to make. So I didn't really think they would go and continue to explode in terms of phone sales. And so I never bought it. And then they continued to, I guess, get into the services business, which has high margins, and they've done really well there. Tesla, I just think was always overvalued. Now I'm actually kind of thinking to potentially enter into Tesla, but not necessarily for the car part, right? It would be more for the long-term robotics and full self-driving and things of the like. Now that that's actually visible and actually can happen, versus where it's kind of been for the past several years with shrinking margins and things of the like. So,
remind me, have you been in a Tesla with full self-driving before?
No, but you will take me on Monday when we get lunch.
Yeah, no, I so we just had the free trial expire, but we have a long road trip at the end of December. So yeah, I think maybe I'll just re-up and then we'll take the Tesla. So
there you go.
That'd be fun.
Yeah,
it's even in hardware stack 3, I think it might be a hardware stack issue, but even in hardware stack 3, like it's very much impressed me. It's not quite good enough for me to subscribe on a regular basis, but we're driving to Arizona for Christmas and back. So it's like, you know, autopilot's good, but man, full self-driving, Elon, take the wheel and get me to Arizona. That's great. It's just like the strain, like it's like being a passenger in your vehicle. Like, you know, you're as a passenger, true enough, you can like play on your phone and sleep or whatever. But it's like being an attentive passenger in your car, where it's just a lot more relaxing and restful as you go. And it's an incredible product. So yeah, we'll have to talk about that some other time in the future. Bootleg Wkly, when Tevis bothers to invite you, maybe 6 to 12 months down the road.
I'm sorry, Tevis invite. Where was my invite to the Tesla self-driving party? I would have flown down to Houston for that. Thanks, guys.
Come down this Monday. You can get a ticket. We're going to lunch. Matt will treat you. How's that sound?
Yeah, I'll treat.
I got to buy a flight to Houston so I can get a free lunch for Matt. I'll consider it. I actually have to work. I don't know how much flights are, but
you're free housing, man.
That's also true. Free housing, free financial advice, free self-driving drive, and free lunch, bro.
That's
this
right.
is the deal.
Let's do it.
Yeah, credit card points. Matt, just a question for me. What is the price? Are you like price agnostic to Tesla, or is there a price you're like not a buyer above a certain price, or how are you thinking about that if you do eventually enter Tesla? Because it's run quite a bit, right?
Yeah, I mean, once again, this is the second time I've ever thought about getting into Tesla. Once was back in 2020, and once was literally 6 months ago. And both times I was, how do I say this? And this is what I tell people all the time, right? Like, don't pussyfoot around. Sorry for my language, but like, if you think you want to buy in a company and you see it at a decent price and you think that it's good for the long term, just buy it. You know, like, I see so many people sitting on the sidelines for Rocket Lab, Palantir, etc. Palantir, I think, is absurdly valued right now. But for example, like I was thinking about buying Tesla, and I was like, "Ooh, I really think you can get back down to 150." And it's like, well, you know, if you really think for the next 10 to 15 years, it's going to be a great company that could get to a couple $1 trillion valuation, just buy the effing stock, right? So, but anyway, I don't have an answer for you there, brother. But what I do have is I did sell. And I think I told you this. I sold June 2025 300 puts, and that was more so to just get a little bit of premium, but the hope would be that if it did within the next several months get into that price range, I would be buying it at about 275, 270 from a price point perspective, and I at least wanted to get my first 100 shares. It's not the perfect answer for you, but if it doesn't, it stays above 300. I'm okay with that, and in the meantime, I'll hopefully be able to collect $3,000 in premium.
Yeah, I think that's not I think that's a fair strategy to just write and see if it hits or not. But I mean, like, human psychology is a hell of a drug, man, because we try to remain calm and rational, and even that we have a forum to discuss all of these moves. And yet, Tesla was at 150 last year. It was at 160 last year, except the difference was that people thought it was going to go to 100, and people then thought it was going to go to 0. And now Tesla's going to cross 414. It's going to reach new all-time highs. It's about $50 away from all-time highs. And I guarantee you that the day we reach all-time highs and cross it, people are going to say, and they're already saying, Tesla 900, Tesla 700, Tesla 1200 a share, and they're going to be buying it at all-time highs, even though they're the same people who weren't touching it with a 100-foot pole at $160, because they're going to say it's a narrative change. They're going to say whatever. But the reality is, it's like that human psychology really messes with people's minds.
Yeah. Well, and I think that's a good note to end on is, just control your emotions, know what your goals are. If you're bullish on a company, even if it's not a perfect price, might consider buying it anyway. If it's a quality company long-term, like a crazy Tesla prediction of Tesla to 1200, it's going to be right. It's going to take years, maybe a decade. I don't think it'll take that long, but eventually I think that they're going to be right because it is an amazing company. And one of the things, maybe one of the little things just to add with Tesla that I didn't fully appreciate until this little poll that I did this week of asking whether it's easier for a hardware company to pivot to software or a software company to pivot to hardware. You see some of each, but is just how hard that really is, either direction. And the poll was like perfectly split, literally 50-50. Tesla is one of those that they don't really sell software. I mean, they do like full self-driving, but a lot of their software they're using internally. And it's so good to the point that other companies have sought to mimic what they do. It's an incredible company that pumps out quality hardware, quality software that's differentiated. And there's the next Tesla is Tesla, guys. So excited to be in it. Matt, I'm excited you might be joining us on that road ahead.
Yeah, there's a steep dip. You guys have to tell me when I'm being too greedy next time.
Oh yeah.
Yeah.
Sounds good.
On that note, thank you everybody for watching the Bootleg Weekly. Thank you, Matt, for finally accepting our invitation to join.
Yes.
And we will see you next week. Roy, enjoy the Robinhood Investor Day.
Yeah.
Give us all the good nuggets. Come back with a Vlad interview or don't come back at all. That's all I'll have to say.
All right. I'll try.
See y'all.
Thank you all.